Greetings to all traders on our Focus Trader channel. We are very happy to welcome you here again and to discuss with you other setups on Forex and to pass on more know-how and much more. But before we start, we can't forget to invite you to our Discord group, where together with more than 100 other traders we discuss different setups and help anyone in need. Among other things, we hope you have seen our previous video where we discussed the GPUST currency pair setup in detail. There were some beautiful setups, but at the same time there were several setups that needed to be analyzed further. Then, based on the rules, which are always predetermined, we did not enter into individual trades. In the video, we also discussed very important know-how that every trader who wants to trade profitably and most importantly consistently should know. Consistency when trading in the financial markets is one of the most important things to master. It is very important that you are able to trade in such a way that your account grows exponentially on a steady and regular basis, not just in spurts. It is not about making a huge amount of money on one trade and then losing it in next few trades. It is also important to keep in mind proper risk management and money management. If you'd like a video on how to properly handle your money management, feel free to post it in the comments and we'll put the video together. Now let's move on to the best part, and that is analyzing setups that have taken place in the markets. For the trades, as always, we used our great indicators that we have been developing for several years, and thanks to them we can take beautiful profitable trades without having to sit in front of the computer for days. So what do you see in today's video, and you definitely shouldn't miss it? 1. Entering at the double top when scalping? 2. How come we saw that there is double liquidity, even if it was from the distant past? 3. Moving take profit to break even. 4. Why didn't the BOS trader draw sell signals? 5. Price bouncing off the volume profile. 6. Another important know-how. Just like last time, we will be risking $250 on every single trade. Let's see what profit we can make today. Last time we made $2,500 in one day on one currency pair. We would like to briefly summarize the setup of the BOS trader indicator just for the newcomers. It's really just a moment, around 20 seconds. We set the bars after liquidity grab to 50 and the left bar/right bar structure to 1. The type of structure was left at default. We set the liquidity mode to left bars/right bars and PVH/PVL to 20 with a time frame of 30. We changed the max hourly duration to 15 and the area of interest to 1.5. All other settings were left at default. Now let's move on to the year JPY chart. Our day, like every other day, starts at 8 o'clock, UTC+1. At this time our indicator also starts to plot trading signals which we can then trade. The first signal we can see here is at 8:05. However, this signal is invalid for us, and this is because the signal was preceded by a double top. Although in many textbooks on price action, a double top is considered a reversal formation, when scalping in SMC and ICT concepts we have to keep in mind that there may be a large amount of pending orders accumulating which traders will most likely want to fill, and only then can we expect a price move lower. Thus, we do not trade a double top and avoid it as a matter of principle. This exact setup occurred a few minutes later. The buyers decided to cash out the trade orders and then committed to a reversal. A break structure was formed and the indicator plotted a potential area of interest. In this area, we also formed a trading signal. We did not have to think over this signal for a long time, and the reason for this was that there was no obstacle in the form of POC or dangerous liquidity above the given signal. So we entered the trade without much fear of loss. We placed the stop loss at the upper boundary of the area of interest and the take profit first at the lower two liquidity. However, this was only the first opportunity for us to take profits, and this was because there were a large number of liquidity lines below. The setup started to develop very subtly. The market went sideways for some time, but then the sellers took the floor. The price started to fall very sharply. We closed half of the position on the first take profit, and since we saw very aggressive sellers, we moved the take profit below the lower liquidity line and waited to see how the setup would continue to develop. The price very quickly took a second take profit and we could only count nice profits in our account. For the first take profit we gained a beautiful $375 and for the second one an incredible $1,000. So we made a total of $1,375 on this trade with minimal risk. The first trade of the day with such a profit is always pleasing. Another setup arose at 10:04 a.m. This setup was again preceded by a nice liquidity grab, even double liquidity. Of course, we would not have known that it was double without our indicator that plots liquidity lines from long ago. In fact, the second, lower liquidity was already from Monday, March 20th, and on the minute chart it is a really big distance. This situation was very much in question and we had to think very hard about whether or not to enter. Why? The reason is the small activity of buyers here. There are small candles here and even though the price went up, we can't see a clear emergence of buyers. However, the break of the structure did occur, so the indicator correctly plotted the area of interest in which it was looking for an entry signal. It was really big and the size of the stop loss needed would have to correspond to that. But unfortunately there was an area of very strong trading volume in the way of the take profit. So the decision to enter the trade was supported by liquidity grab, a quick pullback made up of strong sellers and even stronger reactionary buying activity. Against entry was too much distance to stop loss and the barrier created by trade volume as a barrier on the way to take profit. So the decision was not to enter the trade and was correct. Another and very similar setup occurred at 1 p.m. There was a liquidity grab, the indicator marked an area of interest and then a sell signal. We expected a double liquidity grab here, but unfortunately it did not happen. The buyer stepped up to the plate and we lost $250. On the subsequent move upwards, the BOS trader indicator has drawn many areas of interest for us as there have been several breaks of structure. However, none of the candles that were in the area of interest met the given requirements to draw an entry signal. This is because entry signals are subject to clear rules, such as their size relative to the average size of previous candles. So here everything went perfectly fine and well, because the price was moving steadily upwards and we would only be collecting losses. On Friday afternoon we had a very nice setup. Even though we don't see the liquidity line drawn here, we have to imagine it here looking at the left side of the chart. So there has been a liquidity grab. The price is backed up very nicely against the volume area, which we can plot here as follows. If you have at least a pro account plan on Tradingview, you can use the fixed volume range indicator. We chose to start at the beginning of the short-term consolidation move and end it at the end. After dragging and dropping it here, it plotted a profile for us. Price filled the gap and then a bounce occurred at the boundary of the area. We plotted an area of interest and subsequently an entry signal. Without a second thought, we entered the trade. We placed our take profit on the top liquidity. Stop loss on the lower edge of the area of interest. The buyers here were very strong and the price made us profit by a risk-reward ratio of 1 to 3.5. So the profit was a nice $875. We only trade until 5 p.m. on Fridays, so we didn't look for any more trades and could walk away from the computer with a clear conscience. We ended today with a final tally of 3 profits and 1 small loss, which still gave us $2,000 thanks to a nice risk-reward ratio. So in total, with the last video, we now have $4,500 in our trading account. Not to show only beautiful setups, we also promised a short know-how at the end as a bonus. In textbooks on trading and price action we could read very often that a double top is a perfect reversal formation. While this formation can work nicely and produce profitable trades, when looking at a minute chart it almost always results in the pending order being picked first above the last pivot high or below the last pivot low and only afterwards does the reversal occur. It is very important to keep this know-how in mind. That's all for today's video. If you liked the video, don't forget to give us a like, subscribe, and if you have any questions or a different perspective on the market, comment here. We'd love to talk to you about how you see these opportunities. Again, we'd like to reiterate that we'd love to have you join our Discord group. You can not only get a free trial there, but also many other useful things. Have a great time and we'll see you in the next video.